Hello and welcome again on Stocks Advisor channel. Today we will talk about Plug Power Incorporated, traded at Nasdaq, ticker name Plug. Well, we did many times analysis for Plug, and it's nice to see that it was working really well. Company was showing so-called 20-50-200 pattern, so growing steadily when its moving averages were aligned one on top of each other. We will come to this a bit later, but now it looks like we are in the middle of major correction, which is maybe soon to finish, or at least it opens new opportunities for us to enter. Therefore, we decided to make a video for Plug. And before going further to technical and mixed analysis, if you look at today's trading action, according to Yahoo Finance information, you see that it's minus 7.85, quite big for a company of 23 billions market capitalization. After hours, just in the zero, you can say no much action. These are small volatilities around the zero. But during the day, it was interesting. It opened lower, but then recovered slightly, especially to the second half of the day. But this also means that during the next opening session, there is a gap possible lower. So it might be still either volatiling lower or going a little bit lower. And what we see here, it's a classical example of multiple cascaded decline, actually, or cascaded correction, where moving average 20 works as a very strong resist level. And speaking of moving averages, we have 3 of them depicted at our daily charts. Here on the left, you see their legends. These are moving averages 20, 50, and 200, being green, blue, and red line correspondingly. So if you look at those, here on the right, you see that moving average 20 started to bend downwards from beginning of February and worked as a resist line 3 trading sessions ago here, where the price repulsed. And now you can clearly see it's declining. It's a major correction after being on consolidation already from the beginning of the year all the way till mid of February. And you see there is a clear opening, let's say, declining channel, which is R1, the top, and then you see also the lower part of it forming here, going really straight. So this is the one, and you can actually call it. You can call it R2. So if you look here, R1, R2 is forming actually a declining descending channel, and looks like that it might still continue a little bit, if not at least it might volatile in the center, because now we are just sitting in the center of this channel, and you see whenever you approach the bottom of R2, it works as a very nice and very good support. Why is it still in correction? Why we say it's in correction? The reason for that is, of course, that after being extremely overbought in the area of let's say about mid of January, you see RSI was extremely high, and this was after actually sequential overbought behavior during the last half year. Of course, now it's time for correction. You can see the stock from so-called moving so-called 20, 50, 200 pattern, when its moving averages were allocated like this, is now going for correction. Why is it important? Because if you are a midterm trader, whenever your stock is showing this trend, you are okay to sit inside. Once it's changing this, for example, like now, you need to reconsider your portfolio or re-enter, or actually to be prepared to do some action. And if you look today, it's still, it might be that this is the end point, or some volatility is possible, because what is noticeable here, the volume traded today is really high. It's much higher than the, let's say, than the average level. So the volume is really, really high here, which means that people were buying a lot. So everyone is hoping for rebounds, and therefore we could also, let's say, bet on this, especially given the fact that we are already declining from 70 all the way to almost 35, so around 50% decline is there already. And for a company with this market capitalization, this could mean a fast bonus, fast making, let's say, profit making opportunity. Therefore, also, by the way, before discussing entries, we are already in the vicinity of a very strong support level. Here formed the previous wave, which is about, let's say, 39. This level S1 is also working as a very strong support level, and the price was just sitting on it today. So then, therefore, how to trade here? It's, of course, immediate buy within the size of the current candle, and You can buy there hoping for rebounds at least towards R1 or maybe even higher. So therefore, let's write it here. The channel to enter would be between 35 all the way to 39.50. Yes, it's broad one, 10%, but also if you see the price actions here are quite big. Therefore, the channels to enter are also quite big. So that would be the first channel, and whenever the rebound is taking place, you can take your profit. And always I discuss it at our videos. We advise at taking profit and 10 to 15%, then either re-enter or check other videos, other opportunities. We post many videos daily. This is really important to become a trader with a fixed profit taking and doing it multiple times, instead of trying to bet for kind of casino style and hoping for, let's say, for quick money gaining. If you are a daily trader, of course, if you are a mid-term trader, you need to do it slower, but then it's a little bit different approach as well. So if this is happening, that's would be the first quick money making. Should we decline, this is also still possible because the technical decline channel R1, R2 is still there and we are not on the bottom. So we could go all the way down still until the next actually levels of support. And if you would carefully look at those, you could see that there is one level here at about 30 and between 30 and actually somewhere 25 now, because this is the level where the moving average 200 will be in the middle by that time, working also as a very strong double support level. So why is it important? Because for strongly correcting stocks, the level of moving average 200 usually works as an extreme support, and this will be the for lines S3, S4, and together with R2 and moving average 200, so it actually will be a triple support by these levels. So if the price declines, they are still in technical correction, you could enter again. And although yes, this is very big decline in relative numbers, but if you are just doing non-linear average down, it doesn't matter how much in minus you are until you have money to play with, to enter and to make your profit. You still should be quite okay with the trade. So this would be between 25 all the way to 30, and that would be the level to average down on this technical correction. Still, what might happen after this technical correction takes place, we might dip lower than moving average 200. It's not expected at all just by corrective moves, but we need also to take into account possible negative catalysts kicking in. I always keep it saying, because this is part of our mixed analysis, and mixed analysis that we provide at our opinion videos on our channel means that we do analysis based on 3 pillars. So one is technical analysis, the classical daily candles. Second one is non-linear averaging down based on support resist channels. That's what we do now discuss. And the third one is mitigating of possible risks due to either, I don't know, company news, reorganization, some global stuff, etc. Overall, it's called negative catalyst. You never know when it's coming. You never know in which form it is coming, on what it will be. But you need to know it happens, because companies are companies. These are not only charts, but these are real things, real people. So real things could happen. Some negativity could come in, and therefore it could shoot the price downwards. And then to mitigate this, you need to keep some funds for this case to play with, to average down. And also you need to look for principal support levels where the price will stop. And there you can catch it again to grow with it and to make your profit. Because we still think you need to exit with a profit, or at least with a draw, rather than taking loss. So it's a little bit different approach than just cutting loss or stop loss strategy. So with this being said, if negative catalyst kicks in, of course, the major and very strong support line here will be, it's clearly seen around 15 as the bottom, because it was many times formed as a very strong support. So it actually will be a bit lower, about 14, and the top of it will be here at the level of, you can see at the level of 1750. So let's write it. Therefore here it will be between 14 and 1750. Again, the lower we go, the bigger the channels are, because indeed the price decline, if we go there, would be quite low. And again, it's not we predict the price goes there, it's what we want to do is to mitigate the risks if the price goes there. This is a very important statement. So with this being said, that's the numerical card to trade with. If you are more for graphical representation, you can look here, just make a screenshot of this one to play with, and then you can use it as actually as a trading card. And speaking of nonlinear averaging down, it's a classical 1-2-2 still. We don't anticipate any severe actions here, meaning that severe within this analysis, of course. And what does it mean? It means that the funds you would like to play here, you can split in 5 portions. Then you can buy with 1 portion in the first channel. Should we have further technical correction, you can buy with 2 portions in the second channel. And if there is any negative catalyst kind of doomsday scenario kicks in, you can immediately buy with 2 portions in the last channel. And speaking of how to enter with these into these broad channels with these portions, it's not that you buy immediately on the top. Imagine you are about to buy with 2 portions on the secondary channel. The channel is big, it's from 25 to 30. How to enter? It means that these funds you can also split in 2 or 3 portions here, and you can enter immediately with 1 portion on the top, then lower and lower. So try to slowly enter. This would mean that overall you will be closer to the middle of the channel while averaging down there with your 2 portions. So whenever if rebounds takes place there, you will be in the best position to take the most profit. And we advise taking profit from 10 to 15%. Here it's more about 15% because this is fastly moving chart. But it's also very important not to stay too long. Take it in time and they re-enter. Also check other opportunities. It's very important rather than sitting too long and losing eventually. Because usually, yes, you can a couple of times win like in a casino sitting too long. But in general, statistics shows that you would rather lose than gain a profit. So with this being said, that's all for Plug at the moment. Stock is the major correction move, but soon it's about to end. There are many indications to this. So you could still make a nice profit and make a good trade with it. And for midterm traders, of course, whenever the channel R1, R2 is broken and we are going higher levels, you could wait until, let's say, 50, 60 as a trading channel. But then you don't need, of course, to catch those lower lows on the daily volatilities. Just somewhere in the vicinity of us S2, S3, you can enter if we go there as well. So with this being said, that's all for Plug. Good luck with it. If you are more, let's say, first time watching this video, don't forget to subscribe to this channel if you like to see more. Also check other videos, press the bell button. This way you will not miss new videos and new interesting discussions for US-based stocks.